go again. I'm Thomas, and what we are going to talk about today is how China is preparing for 2024 and 2025 with the help of a slightly communist idea-based bank system, and compare this to the United States. So what will be the role in the global economy from China and from the US? As in every single video, we will go through on the weekly macro data, and this is how I will fold out the story. Compared to the usual in the past few weeks, we will have a data-rich start of the week. PMI data is coming from the services sector, but the preliminary numbers of this data have already been released in recent weeks, so with one exception, they do not necessarily cause a sudden or large-scale reaction from price movement, unless drastic deviations occur. However, we have two figures that are definitely worth mentioning. As I indicated, it will not have a big price-moving effect, but the final services PMI from the European Union provides important information from the services sector due to the possible limits mentioned in the weekend video 2 weeks ago. In addition, the ISM services PMI from the United States is the exception, because this data usually triggers aggressive movements in the case of certain sectors after the data is released. In addition, of course, for the reasons mentioned, we will also receive an important number. The ISM services PMI, contrary to most services PMI data, did not increase in the recent period, but rather decreased. Several hypes emerged in the past period, and the strongest AI mania clashed precisely with this data. So this is also great feedback that companies are trying to create a huge bubble because they see the data too, but if they mouth say something different, people believe it. We heard about massive chip orders from Nvidia, which naturally caused everyone to go crazy, but in reality, the company that would manufacture these chips for Nvidia has no knowledge of any billion-dollar orders. And although the actual production belongs to the manufacturing sector, we do not see any improvement there either. The same goes for the services sector, where these chips would be mostly used. Therefore, there is no recovery in the sector according to the ISM, which supports the creation of fake hype, and we know that Nvidia has already received significant penalties for this in the past. The scenario was that before the crash, which we could anticipate through macro environmental analysis, Nvidia launched a massive media campaign presenting invalid data about expected revenues. Of course, there were no massive revenues, but the CEO sold all his shares at the peak while everyone else got stuck, those who were not experienced in trading. So I could only take a new AI mania seriously if this data rose above 57 points and moreover with a stable increase, not just a spike. Currently we are at 51.9 points, dangerously approaching the 50 mark, and I do not see a realistic chance of reaching 57 points for now. Tuesday will be a light day, in terms of macro data at least. There is hardly anything from the United States that can keep the DXY in movement unless there is some macro-independent hair let loose event. And there is a slight chance of that. Not specifically on this day, but in general. After all, we have released significant news about the US debt ceiling issue, and there are also disputes in the oil sector between Russia and Saudi Arabia, which we have also disclosed. It's worth following these news because they keep you well informed about the events, so visit the news section on our website. And for those who follow us on Discord, they are luckier in several ways. Firstly, we constantly notify Discord members about the news published on the website. And secondly, if someone is a pro member, they receive much more serious content. But let's get back to Tuesday. There will be an interest rate decision from Australia that forex traders should pay attention to, because if the DXY doesn't dominate too much on this day, the Australian dollar may react actively to the new data. In addition, there will be retail sales from the European Union, which is aggregated data but provides important information, and this could also trigger some reaction in the euro. The EU retail sales data started showing concerning signs last month. It seems that there is currently no sign of the summer shopping rush, which is somewhat surprising because I was in Barcelona last week and the city did not seem deserted, in fact quite the opposite. It's somewhat confusing, but data is data, and it slipped into negative territory for a second time with the latest figure of -1.2%, being even lower than expected. Fluctuations in retail sales are natural for the EU, and a negative figure is not tragic as long as it follows its usual cyclical pattern. However, if it occurs 2 or 3 times in a row, it indicates a significant economic slowdown. The last time we had 3 consecutive negative figures was in 2017, but in a fundamentally positive environment, and the last 2 showed an improving trend. Currently, we cannot speak of a positive economic environment, and the decreasing energy prices becoming an urgent issue that further hampers the possibility of recovery. We don't have improving data either, as we have 2 consecutive figures of minus 1.2%. Therefore, if the data ends up below minus 1.2% and there is no dominance by the DXY on that day, the impact on the euro can be highly negative on the following days. Since the euro exchange rate has shown a negative picture from a technical perspective over the past few months, excluding the actual corrections, I don't have many positive insights on this matter at the moment. And then Wednesday is coming. There are also a few noteworthy data releases. We will receive GDP figures from Australia. And since we won't be flooded with data from the US on this day either, the scenario is similar in terms of expectations. You will find more details about the Australian dollar on the Discord. Actually, the overnight rate, which is the Canadian interest rate decision, will be announced, but it will be also worth keeping an eye on the crude oil inventories due to the unusual low reading 2 weeks ago. And after that, a relaxed Thursday awaits us. Although there will be important economic data such as Japan's final GDP, EU final employment change, and natural gas storage from the US, from a trader's perspective, it will be the data on unemployment claims that will attract our attention more on the charts. But here comes Friday, and this will be the most important, and also this will be the data, or the day, when I can mention the data, which will make the final conclusion about China and the US for today. So Friday will be more interesting, and we will shift our focus a bit. We'll have the M2 money supply from Japan, which represents the amount of money circulating in the economy. But we will stay in Asia because we will also get the Chinese CPI numbers, followed by the PPI report, providing valuable information. I know that maybe some of you don't really understand what PPI is or what CPI is, but I am about creating a macroeconomic lexicon, and as soon as it's done, I will post it to the website. So after that, you can check all the data and the economic impact. But additionally, one of my favorite indicators, the new loans, will show how lending is evolving in China. Lastly, there will be a Canadian employment change, reflecting changes in the employment, obviously, and the unemployment rate. So the Chinese inflation figures are overwhelming. I wouldn't place a bet on their accuracy, but one thing is important. If you look at it from a market reaction perspective, so as a trader, we have to accept it as it is, because the market will react to the data. However, if we check the economy and the possible consequences with a more investor-focused perspective, legitimate questions arise. In China, they say there is no inflation increase. In fact, inflation is at 0.1% and is dramatically declining. So the Chinese people are living very well over there. However, it is also worth noting that the banking restrictions in China are milder, and we can see this in the loan issuance data as well. So indeed, the CPI in China is lower than elsewhere, but I'm not sure if the actual data is really around 0. On the other hand, the Producer Price Index, which is the PPI, is another interesting aspect that measures the changes in prices for products paid by the manufacturing industry. It mainly means raw material and commodities. Currently, it is experiencing a drastic decline, which would provide a favorable environment for companies to make purchases. However, we don't know precisely how consumer demand is actually changing in the region, so the production intention remains unknown. Therefore, we can only assume that if this data starts to trend upward, it would indicate an increase in raw material purchases, resulting in CPI growth with a slight delay. This would signify that China is not only stimulating economic growth within its borders, but also ramping up export production. This can only happen if there is an increased foreign demand for both raw materials and manufactured goods. And with not forgetting these details, we come to the new loans data, which may not necessarily arrive on this particular day, but definitely between 9th and 15th. The number of new loans in China follows an annual cycle, with the cycle lows usually occurring in November, and this is when the upward trend begins. Each rising cycle has a so-called peak that shows a significant surge once or twice, followed by a period of stagnation for the rest of the year before the year-end decline. Interestingly, this year we have already two significant values, with the first one almost following the pattern, but it represents the highest number of new loans in the past 16 years. Since 2020, we have also observed that the third month following the first surge trends to bring another exceptional number. This is because the Chinese government stimulates the economy in this way, and it presumably plays a significant role in the low inflation figures. The data will be important for the rest of the year because an unusual third peak could indicate a full throttle launch of the economy, which will positively impact the global economy and supply chains. Therefore, it can be said that in China, the communist system shows positive results in managing the economic crisis, particularly when it comes to the banking sector, while almost every other country in the world has struggled. This is a significant advantage because if the European Union and the United States, China's two largest trading partners, can finally accelerate economic growth maybe in 2024 or 2025, China is ready to meet their full demand, which will put a thorn in the side of the United States government as it falls behind in terms of economic progress. However, this whole process seems to be a coordinated one, as while China prepares for product manufacturing, the EU and the US are preparing with money to pay for those products. As a sign of this, there are ongoing discussions about solving the debt ceiling issue. So it can be said that in terms of managing the economic crisis, the communist system in China is proving to be beneficial, especially when it comes to the banking sector, while nearly every other country in the world has suffered. Primarily, the United States is once again assuming the role of the consumer instead of the producer. And for this, a lot of money will be needed. So the question is not whether there will be another wave of money printing, but rather when. Because currently there isn't and cannot be one until there is quantitative easing. The first step is to resolve the issue of the government's debt ceiling. I have brought a few points worth paying attention to. To make this clear, here is the essence of the agreement. The debt ceiling will be raised for 2 years by approximately $4 trillion. There will be a $50 billion reduction in spending without new taxes, and plans to increase funding for the IRS by $10 billion will be halted. There will be an increase in military spending, and this is quite important, and there will be no budget cuts beyond 2025. So the US government has found itself in a very good position. Imagine having a credit card with a €1,000 limit on it, and you have used up the entire amount. You will have to pay it back with interest, but there is no more credit available, and meanwhile you lose your job, so you don't have much income either. This is where the US government was 1 week ago. According to the new agreement, the debt ceiling was abolished. It's as if your bank called you and said, "Okay, I understand that you have no more money and no more credit, and I know you can't repay. But you know what, here is another 2,000. Or even more. Spend as much as you want." Of course, in a sense, this is not entirely true because the Republicans are now doing everything they can to regulate government spending. Nevertheless, there are a few segments where the money will flow. One of them is the economic stimulus, which will flow into the market when QE arrives. But for this to happen, there needs to be some more economic discomfort. Additionally, the new rules will streamline the environmental review process, which will benefit projects related to both fossil fuels and renewable energy. This change is in line with the promotion of a faster project approval. However, ranking projects still remain a point of contention between Democrats and Republicans. But apart from that, this will facilitate the announcement and application of tenders, which will provide capital for renewable energy industry. And of course, there is an agreement that the next year non-defense expenditures will be maintained at the current level, but in 2025 they will increase by 1%. Defense expenditures would rise to $886 billion, representing a 3% increase compared to this year. The agreement does not include budget caps beyond 2025, as I mentioned. According to estimates from the White House, government expenditure would be reduced by at least $1 trillion, although official calculations have not been made public yet. However, the $886 billion allocated to defense expenditures significantly contributes to the orders provided to Ukraine, and the government has also entered into new contracts for military spending. One example is the case of Lockheed Martin, which I detailed at the pro level. To produce products, this company requires raw material from China. Many raw materials, which based on the macroeconomic data mentioned earlier, we will see flow from China. And this is not the only company where money will pour in. Therefore, there will be products and raw materials from China and money from the United States. We just have to wait for the arrival. And all of this is not for this year, but as I mentioned, for 2024 and 2025. China is ready to make products, and the US is ready to pay for that. We all just need to wait this whole situation set, and we can start again the economic process. Until this point, I hope you not will suffer too much, and I hope you will be patient enough. I hope the information was useful for you. Remember, at the pro level, we analyze every major macro data and draw the proper conclusions when they arrive. If you want to join, visit our website, link in the description. In the meantime, I would love to hear your thoughts and opinions in the comment section. If you want to stay informed about next week's data and other useful information, subscribe and turn on all notifications. And if you enjoyed the video, give us a thumbs up so it can reach more people. See you in the next video.